potential buy-sell exchange pair. After that, it checks if asks exit on the buy exchange and if bids exit on the sell exchange for that symbol. If either of them is missing, of course, we skip to the next exchange pair and dismiss that opportunity. Then we retrieve the best, it means the lowest ask price from the buy exchange's order book and the best highest bid price for 1%. We add that opportunity to our opportunities list, and the function at last returns a list of arbitrage opportunities that meet the profit threshold and have the required coin availability status. That's it. Percentage. This is a threshold for an opportunity to be considered viable. I assigned it to be 0.1, which means there should be at least 1.0% profitability in this trade to be considered. Then it loops through order books for each asset symbol in all order books, and it retrieves all exchange names for that asset. Then the function iterates through every unique pair of exchanges to identify. Now we have everything to find profitable opportunities across crypto exchanges. This function find arbitrage opportunities, identifies potential arbitrage opportunities between exchanges by comparing prices, fees, slippage, and coin availability status from the sale exchange order book, and we calculate profit taking into account slippage and trading fees. And if after all of that profit is still higher than our minimum profit percentage, which in our case is those containing each exchange withdrawal and trading fees rates, coin statuses. This it's a dictionary indicating whether a coin can be withdrawn or deposited on each exchange. Minimum profit its parameters are all order books. It's a dictionary where keys are asset symbols like BTC USD, and values are the order books from different exchanges. Initial capital, the amount of capital you want to invest in the arbitrage trade. Withdrawal fees and trading fees, these are clear. I think these are dictionary